We're looking ahead to next year and how investors can prepare their portfolios. And today we're focusing on the presidential election. If history tells us anything, election years tend to be solid for the markets and even indicate who could win the race for the White House. As part of our 2024 Investor Guide, we ask, what does the political cycle mean for markets and what will be the best play? Jeff Buckbinder, Financial Chief Equity Strategist at LPL, joins us now. Great to see you. Maybe just listen, big picture, walk us through what the election can mean for investors. Lots of already balls in the air next year, Jeff. You know, we got the Fed, the economy, geopolitical risk. How should investors think about a presidential election?
Yeah, well, first, thanks for having me on. Certainly we expect gains next year. That would be consistent with the historical pattern, right? On average, in an election year, the S&P 500 is up about 7%. Now, that pales in comparison to what you typically get in year three, right? The pre-election year, as we saw this year, is the strongest of the 4 years. The average gain has been 17%, and we're going to do certainly well north of 20. So, sure, it's good, but I think a little bit of political uncertainty in general creeps in, and you have a little bit more of a choppy market, maybe upwardly trending, but still choppy. And there's certainly fundamental reasons to expect a little bit of chop as we go through 2024 with valuations a little bit higher, the economy poised to slow. I will make one point up front here about the economy, that if you look back at history, the economy is really the biggest driver, right, of not just how elections turn out, but how markets do. So, if we continue to have surprises on the U.S. economy like we've had in 2023, then no doubt this market can do quite a bit better than that historical average.
Let me ask you about the economy here. A big talk about in 2023 this year has been recession, did not materialize, but whether or not there is a recession can be very predictive of whether or not of who wins the next presidential election. And we still have a year left, or not quite a year left until the election, but enough time for something to develop. Could you talk to me about some of the stats surrounding recessions and their influence on the presidential election?
Yeah, heavy influence, no doubt. The recession is actually a perfect 17 for 17 calling elections. If you have a recession in the 2 years leading up to a presidential election, the incumbent loses. If you don't, the incumbent wins. So, hard to say whether we're going to have a recession next year. This is maybe a coin flip. But if we do, that's going to be a real tall hill for President Biden to climb. Now, if there is any year where you would think of maybe a recession could be mild, maybe some one-offs, the uniqueness of this economic cycle could actually lead to a situation where you have a short, mild recession and Biden potentially gets reelected. We've seen it throughout this cycle that the post-pandemic period has been unusual and very difficult for economists and strategists to predict.